Okay, quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you join our most popular tier, which is Tier 2, you will get access to the public Discord with multiple channels covering dozens of subjects. You can ask me anything you like on there, there's a dedicated channel for that. You can make chart requests, you can even ask to have certain assets covered in the weekly live streams, and the weekly live streams are one of the benefits. These go on for several hours, between 3 and 5 hours, normally hosted on a Friday, but I always timestamp them so you can come back and watch them at any time you like at your leisure. You also get access to all of my educational content, including the Elliott Wave series, trading series, technical analysis series. So there's an awful lot of value here for just £10 a month. It's an absolute bargain, to be honest with you. And then if you want a little bit more than that, you can pay £15 a month. You get everything I just previously mentioned, but you also get the exclusive monthly dividend calendar and stock rating system, and the video which comes along to support that, which we recently just got posted up for our tier 3s here. As you can see, top dividend stock picks for the month January 2023, 32 stocks listed, 16 ex-dividends for the month, with the calendar and stock rating system posted here as PDFs below. We can see a recent live stream, then we can see our economic indicators monthly review, where we went over housing, permit starts, completions, Institute of Supply Management report on manufacturing, report on business, manufacturing, consumer surveys, yield curve, blah blah blah. So there's a lot of extra content I pump out for the Patreon. It's not just educational videos, which you can now access the 16 video long Elliott Wave series, but it's also monthly data that I release only to my patrons, and it's also extra support for tier 3s as well. So please consider joining. It really is excellent value. Thank you very much for listening. Now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, the big one, the update that everyone's been asking me for. We're going to be looking at Bitcoin today. Now, you're going to have to bear with me. There's a lot I want to discuss, and not much of it, to be absolutely honest with you, is Elliott Wave. We will come in and talk about what I want to see if we've bottomed, okay, because that's what's on everyone's mind. Let's just be honest about that. That's the elephant in the room. Have we bottomed? We're going to look at evidence for that case. We're going to look at alternatives against that case, and then we're going to express it in an Elliott Wave form in the simplest way possible, given the recent price action. And I think that's probably going to be the most beneficial way of looking at it, because until certain levels get taken out, there are so many options on the table that it's just going to confuse people, and myself included. So what I want to do is I want to start with the classical analysis segment of this video, and I insist that you watch it, because there are certain things which have occurred during this bear market which make it similar to previous bear markets, but also some which make it different. And that, I feel, is one of the primary sticking points between bulls and bears, and those who believe that, you know, a 70, almost 80% sell-off is sufficient for this to be the bottom, and those who believe that it's going to get a lot worse. And I think both are valid viewpoints, but we're going to look at the evidence as best as we can and draw our own conclusions. Now, those who are members on the Patreon and, you know, listen to me on my live streams and speak to me often on the Discord know that I have, as an Elliottician, a pretty fundamental and basic way of looking at things, which is, if I see 5 off of a strong low and 3 back, I'm going to give it the benefit of a doubt that it's bullish. Could it be the C wave of a flat pattern? Yes, there's always that possibility, but we can still set up with a trade off of a retracement safely and gain more knowledge and insight during that retracement. We're going to talk about that in the Elliott Wave section later, but as a principle, if I see 5 off of a strong reversal and 3 back, I am going to give it the benefit of a doubt of being bullish, and that's what I'm waiting for off the current lows, and we are not far off of getting it yet. It may be another couple of weeks, but if it forms, that'll be enough for me in the meantime. Now, that is not trading advice in any way. It's just my own personal philosophy, because I feel that, looking a gift horse in the mouth, I'd rather take it and then be proven later that the thing was lame than end up with no horse at all, when I could have had a racehorse, so to speak. Now, you might get the analogy, you might not, it's an old one, but either way, you don't look a gift horse in the mouth. In other words, you don't take a prime specimen and then start grumbling about its teeth. In other words, you just take the goddamn horse and leave. So anyway, let's get on with it and let's talk about the long-term count here on the BLX. So the long-term count, which I did a pretty deep thesis video on in detail, taking it apart all the way from the beginning of price action. It was over an hour long, and that's a few months ago, and I still feel everything I said in it is valid. So if you want to go watch that, go watch it. Analysis is still holding up over the long term, but we had sharp correction, and then sharp correction, and then sharp correction. That's how we're interpreting it. So 1 2 1 2 1 2, very 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 bullish count for the long term, and it's still completely valid. One aspect of it, which I think has to be taken, weighed up against all other considerations, is the length of time this correction has taken. Now, that's one of the only sticking points. We got a single simple zigzag at cycle wave degree. We're assuming a more complex multiple zigzag at primary degree, and this correction has proven to be a few days longer. Not by much, but a few days longer. And that has been enough to upset some people, and I totally understand and appreciate that. It is unusual to have a smaller wave degree larger than a larger wave degree, but it isn't unheard of, and it is not unprecedented, especially here in the crypto markets. The simple scaling up of this thing over time, I think we're going to see price skew like that. And I feel that if we are going to be entering a free within a free within a free within a free, then we could expect to see even higher or even greater levels of expansion going into the future. But that's all total speculation. We'll have to wait and see how that plays out. But for the moment, this is intact. Now, you have to weigh up your disapproval of that in terms of the length of it with the lack of alternation in any alternative count, which concludes this to be a primary or cyclical or super cycle wave top. So for example, one of the most common ones I've seen and the most simplistic is to just go 1 2 3 4 5 and then call this the top. So sharp correction, no alternation here, sharp correction, no alternation here. If you want to appreciate how I feel about these various wavelengths and sub wavelengths within this large count, go back and watch that video from a few months ago on the long term macro count, and you'll understand why I have problems with that count. Okay, and my problems with that count are significant enough for me to still prefer this as 1 2 1 2 1 2. So on that note, let's now come in and have a look at some classical analysis things that I want to discuss. Okay, so first thing I want to do is I just want to come out to the monthly time frame, turn the count off. So we're coming out really far now, and I want to present some evidence that this could well be the bottom. Okay, before we consider Elliott wave and all the other options which we will consider fairly, and there is always the possibility we could go lower, but I'm just going to support for the moment the possibility that this could be a low, and I feel that coming out here to the monthly time frame is going to be the best way of doing that to begin with. So we're going to bring up our indicators, and I want to look, first thing I'm going to look at actually is the MACD, because patterns are patterns, cycles are cycles, bullish and bearish phases, bullish bearish phases. What I want to point out here, and we're going to go all the way back to as much data as we can get. So let's just keep expanding this. Alright, and we're going to come back to the bullish and bearish phase going into 2000, from 2012 into 2013 into the bear market of 14-15 and back out. What you notice is that once, just as when we come up and come down, once we accelerate into the bear market, right, we accelerate and then we start to cool off and bearish momentum starts to die. At no point once this cooling off begins do we spike again and come down. Do we spike higher, spike higher. We just continue to cool off until the next bullish phase momentum begins and we go up in another huge bullish wave, right? Now if we move forward in time to 2018-19 bear market, we can see just as we come up and down like that, we never return to a new high. That bullish momentum never reverses to a new high. the bearish momentum never reverses to a new low, right? We come down aggressively. We come down into that December 18 bottom, January 19 bottom, and then we start to soften and bearish momentum dies off. We have that first wave up, and as you can see again, we come down, and then we get that COVID event in March 2020, leading to the low of a smaller wave degree, and then we accelerate again into the bull market to the peak. We come down again into another bear market, 2022 bear market, and as we can see here, we've come down aggressively, bearish momentum increasing, and then now we've started to cool off. So my point being, guys, if we were to do anything other than continue this cooling off for the next few months, out into the summer, and we were to suddenly, for some reason, spike lower, that would break the entire historical trend of the MACD in Bitcoin. So I know this is, you could argue this is a bias, because what it's done before doesn't mean it has to do it again. However, if we are continuing the same behaviour, and so far month after month after month after month after month since August, we have been following this trend of bearish momentum dying off, right? So that signal is going to start coming back up towards the average, and then we're going to get across, and we're going to continue the dying down of this bearish momentum, and we're going to start the next big bullish move up. And if it's the same as this expansion over this, and this is the same as that expansion over this, this is going to be the next expansion over this, right? Because we're going into that 3 over 3 over 3, and it's just going to keep being a function of scale, scaling up over time as more and more people and more money pours in. Right, so there's a bullish take on the historical monthly momentum. So let's look at another interesting point here on the RSI. Now, when we bottom on the monthly time frame, we've never made it into oversold conditions. Momentum, as we just discussed in the MACD, would have to reverse something fucking fierce to force an oversold reading on the monthly time frame. I don't think we can gather that kind of bearish momentum. Okay, so I don't think that's possible. Now, I'm not saying that on a much larger scale we could be doing something before making another low, but it would be a much larger scale, in my opinion. I feel it would have to be in order to force new lows. But one thing I have noticed, the lows of 2011, which was a 90 something sell-off, the lows of the March 15 sell-off, which was an 80 something sell-off, and the lows of 2018-19 was 80 something again. These were less in price percentage terms each time, but they were more severe in RSI, and we've continued that trend again in 2022. We are lower than we were back in 2009, just as 2019 2018-19 bear market was lower than the one in 2015. The one in 15 was significantly lower than the one in 2012 and 11. This strikes me as sufficient on the monthly time frame to have reached a low. I'm not saying it is confirmation of one, it just strikes me as sufficient. Okay, so that's my take on the RSI. You can also see how we've broken this downward trend of lower highs, high, lower high, lower high, lower high, and now we've moved back up. Now, still a long way off, pushing through neutral, and then nowhere near getting into a bullish phase again. But this is the monthly time frame, isn't it? So let's now come in and have a look at the weekly time frame. So now what we're going to do is we're just going to need to turn that off. Okay, turn that off because I haven't put in its own folder. I just want to bring up the weekly folder I've got here with some extra data. Right, so RSI again on the weekly time frame. So we had this red line, which is the bearish trend that broke in the previous bear market. We could essentially do the same here with this bear market, right? This high, this high, this high. That's now broken. We've had the weekly RSI reading break back into neutral territory. The previous high was back here in November 2021. That was the actual high of the market. Strong fifth wave divergence here due to a failure to extend the fifth wave, which seems to be the norm, or more common, didn't occur this time. Now, there are alternative counts which allow for this to be B wave divergence, because we're building some alternative structure. Now, we're not going to get into that today. I'm just going to point out that breaking of this downward trend in the RSI on the weekly time frame has also occurred after reaching oversold conditions that we have never reached before on the weekly time frame, deep into oversold territory. Now, given the momentum we spoke about a moment ago, I feel forcing more oversold conditions deeper than this within whatever this bearish cycle is, I find that highly unlikely to occur, just because I think most of the selling's done. FTX over with, I'm not saying the fallout's completely over with, but with FTX over with, I'd argue the vast majority of selling has been done. Okay, so there we go, extreme oversold readings here, and we've seen the same downward trend here broken in the prior bear market as well. We did that overbought to oversold, overbought to oversold, overbought, oversold, which is how we bottom these bear markets, right? And we've done the same again. So now let's come out of the RSI. MACD momentum picking up again, quite impressively actually. When we look at the weakening momentum here in the bullish histogram, in the bearish histogram, and the bearish behavior in the histogram, momentum dying down. We saw that in the monthly time frame, just as we saw the bullish momentum dying down as well with each counter trend swing. So now essentially we want to see, now that we've got a higher reading here on the weekly time frame in the MACD than we've had since the bull market, right? We topped in November 2021, right? So since the end of the last bullish phase, we haven't, this is the highest reading we've had in the momentum. We've taken out this swing high and swing low, okay, in the MACD, and the signal crossed over the average back in July and has continued higher since, right? So bullish momentum now starting to build, bearish momentum dying off. We've seen that on the monthly time frame, right? Confirmed here on the weekly time frame. Like I said, it's going to be a long one, so just settle in, go get a cup of tea, cup of coffee, whatever. Giving the bears the benefit of the doubt, as I don't want to make it too easy for myself, because I'd rather be pleasantly surprised than easily easily disappointed. I'm looking for this trend here from this high and this high to be the one that breaks on the OBV on the weekly time frame. I want to see this pivot taken out, all right, and I want to see subsequent price swings taken out to match, and I want to see a move above this trend line, and I want to see positive accumulation of volume, the re-emergence of positive accumulation of volume supported by momentum going forward, right? And I want to see an impulsive wave, and I want to see a motive wave count on Elliott wave that supports all of this. Right. Still below the zero bound on the MACD, but if we have finished this phase, this bearish phase, we will see that reverse. We will see overbought conditions on the RSI. We will see a move back above the zero bound in the MACD. We will see a break of that downward trend in the OBV. We will see more and more evidence that we are indeed bullish. Alright, so let's just look at the RSI for a moment again and point out the obvious. So bear markets and bull markets. Right, we're going to come down to the daily time frame here, and we're going to observe the RSI on the daily time frame. So bear markets and bull markets. Bear markets can be quite simply identified by a lack of bullish RSI readings in overbought territory. These are corrective bullish moves, right? They are essentially synonymous with several consistent oversold readings. Now, bull markets are the opposite. Right? They are consistent with regular overbought readings and very few oversold readings. Okay, and this is true of all prior bull markets and bear markets. What makes this rally interesting at the moment from a momentum point of view, from a strength point of view, excuse me, is it came off of the back of divergence and it's strong as fuck. Pardon the language. So we have seen an RSI reading here on the daily time frame, which we haven't matched since 2017. Right, nothing in the prior bull market matches this for its sheer strength off of the low. All right, and that could be a one-off. It could be a correction, possible, or it could be a signal of the first wave up out of a bearish phase. So when we finish these long oversold readings of bear market, we have that first thrust up into a new bull market. This looks like it could be that. Okay, it's strong. There's no doubt about it. It's overbought like buggery. 94.93. Pretty impressive. Okay, and of course there's divergence again on the RSI, the MACD, and there's even divergence on the OBV, which is quite rare to see. On balance volume gave in a perfect flat bottom, double bottom, whereas we had lower lows in the RSI. So, or we could look at it as support at least, I should say. Excuse me. So, that's, yeah, I misspoke there. We didn't have true divergence. We just got that double bottoming pattern, which is a sign of end of negative accumulation of volume, the beginning of positive accumulation of volume. Now, since that pivot here, everything in this move down, you could argue that we've definitely broken trend, regardless of how you draw it. Right? But in the overall long-term trend, we could still way below it, right? Could still be way below it. But for the moment, we're accumulating positive volume and we're pushing higher. So back to the weekly for a moment, because I forgot to talk about volume on a longer time frame or a higher time frame. So let's do that. Move off of the low does have a push from volume. Okay, in fact, we haven't really seen its like since the bull market. Right. So all through here, we have to come back to here in the wave 3 into the prior high to try to find a reading as strong as this one. We do have one single weekly bar here. Everything else is below it. So that's a pretty significant push from volume. Okay. So we've gone around the houses, haven't we now? We really have to try and prove our point. Those are all the things which are similar with previous bear market bottoms. Right? We've spoken about the RSI, the trend in the RSI. We've spoken about we never get a reversal of momentum in the cooling off phase of a bear market in the MACD. We've never seen that before. That's the same. Okay, the round trip we see is the same. The overbought to oversold conditions that are consistent readings, they're the same. Those are all the things which share a very almost identical behaviour with previous bear markets. Okay, so now a couple of the things which differ. Weekly time frame. This is the 60 over the 250 exponential moving averages on the weekly time frame. We've bottomed before, below the 250. Couple of bars and a wick. We've never had a sustained move below it like this before. Doesn't matter how far back we go, because we've run out of data. Okay? Because Bitcoin's not very old. We have frequent moves below the 60 for these bear markets. That's consistent. We have tests before we roll over and back tests once we do. So a test here, a back test here once we do roll over. A test here, a back test here when we do roll over. A test here, and the COVID one I don't think gave us time for a back test because it was just sheer panic. But we see the same here, a test here and a back test here before we roll over. Now that's all consistent behaviour in terms of the three-way swing that you tend to get, because they're all sharp corrections, the three-way swing you tend to get into the low. However, we've never forced our way below the 250 like this before. Now this could, again, just like with the RSI getting deeper, the MACD expanding into bigger histogram recordings, this could be a function of scale. Okay, just a young asset that's going to explode into the future. Or it could be because this time it is different and this is some kind of top. Right, that also has to be considered, and that's where we do differ. We've come down below the 250, we've backtested it and fallen from it. We've never done that before. So there's a bearish take on things. Now, however, a thrust back above this pivot and the 250 in an impulsive move, that could be the new standard for future bear markets going forward. Now, that's pure speculation, guys. Pure speculation. There's no way of knowing. but the relative sell-off, the scale of them, because like I'm talking about, the sheer move in price from 70,000 to 15,000 is more impressive. I know you're going to say, what, Tom, percentages, it doesn't matter. Yeah, well, it kind of does when it comes to actual moving indicators like we've seen in the RSI, when it comes to lagging indicators like moving averages. The fact that this, you know, is 16 grand, okay, and this is like 55 grand, it does make a difference. Okay, so maybe that's what we're witnessing here, just a function of scale. Now, that could be complete bullshit, but, you know, I'm just saying, that's overall still bearish. We can't deny that. We're below the 250 weekly exponential moving average. We're still below it. That's bearish. For as long as we're down here and we're below all these prior pivots, that's bearish. Start to break those pivots and move back through this moving average with support from volume and momentum. That's going to look very positive. Okay, now I think we have to leave the classical analysis bit there, and I know this is long-winded already, and that's why I didn't want to go over all the prior bullshit, pardon my language, all the prior support and resistance. Like I said, you want to know all that, go look at last week's video, go look at the weeks before. All of the points I made about if we move lower, and we could, if we move lower, all of those prior support levels and demand levels and Fibonacci levels and extensions, they're all still in play. Okay, so now let's come off of log and come into linear for a moment, and I want to start by just using a simple regression trend. When this is, I think, when you do genuinely get an appreciation of the severity of this correction. Yes, percentage wise it might not be impressive as 17 down into 19, but in price terms this is a scary, a bit of a slip and slide, and it's a scary one at that. But this represents two standard deviations from the mean, which is the red line here. Blue lines are two standard deviations from it, which should contain 98 point something% of the results within a range, within any data range. We've taken the high to the current low. That's what we've done here, and we can see that we've now come out of that range. Now, we have peaked out of it before, but we've only wicked out of it. We've never barred out of it like this. That's a pretty strong suggestion that unless we're doing a much more significant correction, that this phase of it is either the whole thing and it's done, or this whole phase of it is done. So you're getting something, either you're getting something up and then down again, and this will be connected to something more severe, and it's probably game over. You know, if we were to get an equivalent move in linear, it would be. Or this is a sign that this is over and we've broken out of it. Okay, so there's your little regression trend. We move into log and we try and put this inside of a channel for a moment using Elliott's technique. So we're going to take the start of the correction. The first swing, this would be your B wave normally, but since this is multiple zigzags, we're going to take the first major pivot because that is a larger degree X wave in this case. Alright, and then we're going to move down along that line, move to the next major pivot. So when we look at it in log, we're still well within a downtrend when using that channeling method. Okay, now we could have maybe had an extreme move here, and then the rest of the readings have tried to bounce along the bottom of the channel into the median line along the bottom of the channel, and this is just an extreme sell-off. This move into June. Well, this is when the RSI peaked, okay? This is when the momentum peaked into the low, so it could just be an extreme move, and this tends to fit better as a channel if we do that. Still within it though, aren't we? So a break of this channel, a break of prior levels, momentum, blah 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 blah. Again, on the logs time scale, is going to make me even more bullish, being absolutely honest. Okay, so there's a break of that channel. Now, is there anything else I want to talk about that isn't all the usual bits and bobs? Pitchfork. Let's have a look at what we've got here. Corrective pitchfork. Right, so corrective pitchfork. This is a slightly different pitchfork. We're going to look at another one in a moment as well. This is based off of a swing from here to an expansive new price extreme here. So swing low, external swing high, and then we move down, out of bound, median line, 61.8, 23.6, out of bound. Now, I don't know, this is really built off of the idea that this is some kind of expansive move with 5 waves in the sea, like a flat. Okay, now I'm not saying it has to match any Elliott wave pattern, because pitchforks have nothing to do with that. I just like to place them off of Elliott wave pivots because they tend to be very accurate if I do. So I'm going to keep this no matter what, and the break of this as well is also going to fill me with some confidence because it's maintained and contained all price since. Okay, now let's switch off that one and let's just have a look, have a wee look-see at how this one looks. Okay, now let's go through the motions of changing the different structures. Let's have a look at a basic shift. Not applicable. Let's have a look at the basic mod shift. Okay, extreme reading here, that fits our channel. This is another one I'm going to want to keep. Okay, because all I'm trying to do here is just slap as much geometry around the damn thing as possible, because it all points to trend, right? It all points to trend breaking down or continuing. Alright, so we've added that as well. So we've got some trend breaking to do. We've got some reversing and further movement higher to do to convince us that we've ended whatever this is. Right, now I do feel I've been waffling an awful lot now. I don't think there's anything else to discuss from the classical analysis point of view, so now we will move into the Elliott wave segment, so bear with me. Okay, so we've come over to our actual Bitcoin master chart now from the BLX instead, and we're now going to talk about what I want to see. So before we talk about any Elliott wave explanations of this corrective trend, we're going to talk about what I want to see first, because this, if you're going to take anything away from this video, you just want to take this away from it. Okay, I said at the start, if I see 5 off of a low where I see positive signs from a classical analysis of the bottom, then I'm going to run with it. End of story. I'm just going to run with it. And I'm not telling you to do that, and I'm not encouraging you to do it either. I'm just saying that's it's just how I roll. So on that basis, we're going to say what we need to see. Okay. Now I put this out of the Discord a few days ago. So we have a red line here at 21,473. This represents a wave 2 pivot within the primary count, which is so fucking close to being invalidated now. Pardon my French. So close to being invalidated now, it might as well have done so, but technically it hasn't. So it's still logically, technically possible. Okay, what I want to see is I want to see 5, 3, 5, 3, 5. I want to see 5 waves up. At that point, this becomes either a 1 or an A of a larger correction. I want to see 3 waves back. This becomes 2 or B of a larger correction. There is the possibility, which we'll discuss in a little while, that a higher 5 wave move up could be the C of a flat and the reversal, but we will get clear reversal signs if that's the case, and we can't look into the future, so we don't know. So better to go with the higher probability for a shorter time frame count than it is to start trying to predict longer term pivots, which we can't possibly know because we're not psychic, so we can't possibly know that. Alright, so if I see 5 up and 3 back, that's more reassuring than me wondering what the hell it could be. So what am I saying? 5 waves and the break of this level at 21,473. Increased confidence in bullish count. Then we've got, if 5 waves up and break this level, high confidence. That's 25,212. That gives us a clear 5 off of the low. It breaks this as a pivot for a bearish count down from this level. It does not break the idea of a larger bearish count, but it breaks the idea of every primary interpretation of a lower count or bearish count that we have from this point. Okay, gives us higher confidence in 5 waves off the low. If this whole structure occurs, any pullback will be seen as a buying opportunity at the very least in the short term. So 5 up and 3 back is either 1, 2, A, B. Any setup, it could be. It doesn't have to look like this, guys. It could look like this and be 5 to here and then 3 back to here. It could even be 3 back in a flat. But whatever. We're going to see weakness at the top of this structure on the smaller time frames. In the RSI and the MACD, we're going to see signs of it, a pending breakdown, and then we're going to see signs of a break of trend and a reversal. That's your correction. Once that's coming in, you set your fibs 50, 61.8, 78.2, 38.2 if you want, and you start looking for signs of a bullish reversal to the upside to set up the trade long. And that's what you're going to need to do. You're just going to need to watch this thing. It's going to take weeks to play out yet, so there's no big rush. Take us out into spring probably. Okay, now it could happen faster than that. I'm just saying, if we get a full larger 5 waves up and 3 waves back, I'm going to look at it as bullish. So that's what I want to see. Break of this level, 25212. Break of this level, 21473. Let's come into the linear for a minute so we can get a better appreciation of what we're looking at. So far, the swing off of the low, which can be seen as 1, 2, 3, 4, 5 into 1 into 2, has come to the 1618, which is a wave 3 extension, and we've snagged a bit. This could be a 3 forming into a 4, right, and then a 5 to give us our 1. We could be within a subwave within the 3, which is also possible, where we've got 1, 2, an almighty 3, 4, 5 into 3, which could hit a higher target such as the 2618 or even the 3618 before correcting into a 4 and moving again. Shorter time plays, shorter time frame trading off of these pivots is probably your best bet if you're a day trader in the meantime, looking for the momentum, looking for levels to trade off of. But in terms of a larger move off of the low, 5 up and 3 back is what we want to see. So there you go, that's what we want to see off of the low if we want to have confidence in a bottom being in place. Now that we've discussed that, let's talk about what it could be from an Elliott wave point of view. And here we are back on the BLX to do this, because I want to take it through from scratch. So, completing the count, let's bring up the primary. And let's bring up correction number 3 is labelled. This gives us a double zigzag into the current low. The current low is the bottom in this count. The cooling off of monthly bearish momentum, the oversold conditions on weekly and monthly time frames, and the snapback in bullish momentum, the break of the regression channel, and the short-term trend from the prior pivot. All of this supports the idea that we're done. Okay, it's not proof of it, it just supports the idea that we're done. Now, let's have a look at our moving averages on the daily time frame. This is our first attempt to move back to the 250 since the prior pivot that we had as a major intermediate degree pivot of an X. Right, we did not do that on our second attempt. We just made another zigzag lower. So we're coming back to test a major source of resistance over the longer term. We saw it here with a double top. We saw it here with a series of tops. We saw it here with support. We saw it here with support. So a move up and back onto this for support would be compelling, but not necessarily proof. But we just want to observe how we respond around it. Okay. So that has us off of a low. That's 1. That's 2. This will be 3. That'll be 4. That'll be 5. That'll be 1. That'll be 2. That'll be off we go. Right. And that's the bullish interpretation. This I think best subdivides as another double zigzag itself, because there doesn't appear to be a motive structure down from the Z or to the Z. It appears to be 3 waves into a new swing low. So if that's the case, I would probably label that WXY, because I've just realised, guys, I haven't labelled it. So W, X and Y, and then 1, 2, and off we go. So I'll just put that in that folder. So that's the one which has us complete. Now let's have a look at the one which was our primary. This is the one which is about to get invalidated. Okay, so this has been moved because I was going to share with you another count in a minute, but either way. So this is the idea of 1, A, B, C into 2, and then this was 1 and 2. That's gone, obviously. 1 and 2, again, we can't come back beyond where the 1 began. This is the 1 down, that would be. This is the 2 back. We've basically done it, but we haven't done it yet. That was that invalidation level I told you about when we looked at what we want to see. That's the first invalidation point. So no impulsive count of an extension from here is possible once that pivot's taken out, and it's practically gone already. It's just not technically gone yet. Okay, so the only alternative in extending this lower and I want to credit one of our members to some degree with this, because he shared it with me after my last live stream, and that's John HBG on the Discord, was the possibility of a diagonal from this point. So we've had a zigzag down into a 1, and now we will get some kind of diagonal down from here. That's possible. I can't rule it out, because from here we seem to have a three-way structure. From here we have a three-way structure, another three-way structure down, another three-way structure back, another three-way structure down, would be an ending diag. Okay, since I can't really justify any kind of extension into the final C leg of this Y now, I'd rather suggest that as an alternative. So I'm going to grab those trend lines, and this will now be correction 1 idea. Now I'm going to mention the same guy again now, because we've been going back and forth on an idea since a live stream or so ago about the possibility of a larger swing, and he's mapped it out, and I'm going to come in and show you that now. So basically, if we I think we need to come back up to the other chart here. This is called an expanded flat. Okay. Now we might have slightly different subwave counts, but I'm going to credit the guy with the idea nonetheless, because I was still in the process of thinking this through by the time he'd got it up on the Discord. So well done, John. And this is the possibility that this is a larger correction. Now I'm not. I don't want to. If I miscredited, or if somebody else shares the same idea, believe me, I'm perfectly happy to give you credit to. It's just this is where I saw it first. Okay. So, from one of our own members, we've got, it doesn't really matter how we get into here. I've got into here an ABC with diagonal in the C, but I'm not sure if he did that. Either way, that's A. I use a WXY to get to here to get B, which is an expanded B wave. We then come up in 5 waves in a C to get X, and then we start another zigzag down. So, it's possible, given the monthly momentum readings, given the previous patterns of Bitcoin lows, it doesn't fit at all for me, I have to be honest, but it's possible. Now, at this point, the length of the C becomes a little not problematic, because we haven't seen the full structure yet, but let's just map it out. The length of the A from the B, the C is up here at the 1618. At the moment, 1 and 2 and 3 on the smaller degree to 1618 does not look like we could get there in a 5, does it? Now, it doesn't have to. An expansion beyond the A is acceptable, but when we have a significant expansion to the 123.6 or 131.8 of the B wave, then we would expect a deeper expansion in return, probably targeting the 1618, but it doesn't have to. It could come up to here, this area here, and then reverse. But that's the target I would more likely expect to see, because it will cause the most damage to traders, because we'll take out the prior pivots, we'll have a 5-wave move up, and that will look very bullish. Now, this is why we don't trade breakouts. We wait for the retracement, because the worst case scenario, we're wrong and we get stopped out with minimal losses. Buying the momentum through this level and then a reversal, well, that's just bad news bears, isn't it? It's just bad news. You're going to get battered. So we don't want to do that. But this is basically the idea. So let's come back to the BLX to express it, because I'm sure I put it on here. You know what? I must have taken it off. Don't know why I did that. Either way, let's redo it then. So essentially now, what we've got to do is express this move here as A, 3 into a B, and then 1, 2, 3, 4, 5 into C, and we know this is an X wave. So really, the only feasible count I see to express such a huge pivot, massive pivot, that is how long in length? It's going to be like 250, maybe longer days, which is longer than the whole first wave down. So big ass correction. So I think the only best way we could look at that would be to look at this as a single zigzag. We'd have to just get a count of 535 in here for W. A, B, C, X, and then Y. That is probably, in terms of the bearish counts, which don't result in an ending diagonal and a lower low in the meantime, that actually extends price significantly deeper, I think that's probably the best bet the bears have got. But it's not my preference. You know, so I know I'm probably sticking my neck out, and I'll get all sorts of shit if I'm wrong. I've told you what I want to see. I want to see 5 and 3 back. I'll be more bullish once I've seen it. I'll be more confident once I've seen it, given everything we've observed in the classical analysis. I'm not confident yet, so I'm not going to call bet. I'm not going to call bull. I'm not going to call it's the bottom. I'm just saying, look at what we've got and what we want to see. From a bearish point of view, I feel this is the best bet. You know, this is really the only way I can see the bears getting lower in any significant way. Any other way would probably be off of that 1, 2, 3, 4, 5 diag into all those bloody supports I've mentioned 1,000 times before. Right? Maybe we could do that off declining bearish momentum on the monthly time frame and very strong bullish divergence going forward, because that's what you tend to see in an ending diagonal before a reversal. So all of that is all I've got to say to you guys. I think we've got to leave it there because my voice is falling apart. I can't go on any longer. So we're just going to save it there, and we'll say larger bearish correction. So let's have a quick summing up before we leave. Right, so bullish count. We've come into a low. We've got 1, 2, 3, 4 to come, 5 to come, into some kind of 1. We're looking for 5 up and 3 back to get our 2, then we extend higher, and that's the new bull market underway. Okay, that's the first count, and once I see 5 up and 3 back, I will give this primary, I think, unless I see something really significant occur across the classical analysis to make me think otherwise. Once I've got a confirmed 5 up and 3 back, I'm going to give that primary. My alternate, I think, would then have to be, because of 5 ways, would have to become this: ABCW, ABCX, ABCY, and that would be my alternate, and that would be the bearish alternative, and that will be where we're going from there. In the meantime, we've got some levels to break, we've got some work to do. But that's it, guys. So thank you very much for joining me on this incredibly long-winded Bitcoin video. Please watch all of the classical analysis section of it. I hope you have. And if you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. You'll be receiving this video as early access today. YouTube will have to wait another 24 hours. And if you're interested in joining Patreon, there's a link in the description box below. Head over, have a read of the tiers, feel free to sign up. And if you're not following me on Twitter yet, please do so, as I always post when I've uploaded the video to YouTube on Twitter. Alright guys, take care of yourselves, and I will be back with you shortly. All the best. Bye bye.